Hello, everyone, and welcome into crushthestreet.com. We're going to be covering the resource sector today, gold, silver, and what is going on in the mining shares. I have David Erfle on the line with me today of juniorminerjunkie.com. He's a regular contributor for Kitco. And if you want to be positioned in the precious metal sector, this is someone you definitely want to follow, subscribe to. So, David, without any further ado, thanks for coming on Crush the Street with me today.
Thanks for having me on, Ken.
Sir, we're seeing new highs in gold, almost $2,000. We'll see by the time this interview gets posted if we're already there. Might have to do a quick little update on that. But regardless, I think we have some important content to talk about with gold hitting new highs, silver hitting, going through 2016 highs. So let's talk about gold here. Its move up above that 1921 level. What are your thoughts surrounding gold? Why is this happening? And, what are some expectations for it?
Oh, sure. Well, why it's happening, I mean, it's basically the perfect storm for the precious metals here. You've got central banks creating all this cash, all this stimulus. You've got U.S.-China tensions really ramping up here. Consulates shutting down. And you've also got massive loss of faith in government currencies and in governments as a whole all around the world. But once the gold price made a quarterly close above 1,800, that was the sign that gold was about to go into a runaway market, which has happened now. Because basically here now that gold has gotten over that 1921 level you mentioned, every single person that's ever bought an ounce of gold is in the money. We're now in blue sky here. So the volatility is really going to ramp up here. Gold is basically in a runaway. For the last 7 consecutive trading sessions, it's closed above its upper daily Bollinger Band, which is extremely rare. I mean, the Bollinger Band is an algorithm that's designed to keep the gold price within the bands, an upper and the lower band, 95% of the time. So 7 times closing above the upper Bollinger Band, gold is in a runaway market. And as you said, the silver price also is caught on. And when you have the silver price leading, this is also extremely bullish. The gold-silver ratio is now below 80-1, which it got up to about 125-1, which was an all-time high going back thousands of years. So now with the silver price leading gold, the juniors have really perked up, and we've also seen all this capital come into the junior sector. There's billions and billions of dollars coming into the juniors now. I think 1.5 billion this year already, and when you see that, that's extremely bullish. And also, a lot of these financings do not include a warrant or only a half warrant, which is very, very bullish.
Absolutely. Well, and it's an interesting time. As you mentioned, gold led the way. There were days gold was up and silver was down. I mean, prior to this change that we've seen. So, given these new territories we're getting into, what's your expectation for gold? I'm not necessarily like a price point, but, are you expecting gold and with gold in the headlines, gold hitting all-time highs? I mean, all these Robin Hood traders to start flooding in, the brokers to start getting a lot of calls, and really the ramp up of capital that starts to flow into the sector because gold just hit an all-time high. Because I think a lot of people might be concerned about getting in because, we're hitting an all-time high. But this could kind of be the start of a real ramp up, in my opinion, at least.
Absolutely. But as far as the gold price is concerned, you mentioned $2,000 at the top of the interview here. December gold actually did hit $2,000 an ounce overnight on Monday evening in Asia. So I wouldn't be surprised to see $2,000 being struck on the COMEX here very soon. There's the $2,000 level is a psychological level. So there's going to be a lot of volatility around that level. And we've already seen silver hit resistance at 26 and go over a little bit. So those are the 2 levels to watch here on the short term. But as far as where the value is still in the juniors. I mean, I know you've seen a lot of these juniors go up 2, 3, 4 times in the past few months. But a good chart to constantly refer to is the XAU to gold ratio. As the XAU Philadelphia Index Gold Miner ETF index, not ETF, has a lot more history in it than the GDX. So you take a look at that XAU to gold ratio, and actually, I know it's hard to believe, but the gold stocks in relation to the gold price have been in a bear market ever since 1996. And I say 1996, and you look at it on the chart, there's something very important happened in 1996. The Bre-X scandal was what was unleashed on the market. You know, Wall Street had already priced in 70 million ounces of gold, and it turned out to be a huge scam. And the geologist of Bre-X was either pushed out or fell out of a helicopter over Borneo in 1996, and he basically took all juniors gold stocks and mostly gold stocks with him. And the gold stocks, in relation to the price of gold, have been in a bear market ever since then. Even though gold has went up from $250 an ounce in 2000 to $1,900 an ounce 11 years later, the gold stocks, in relation to the gold price, are still in a bear market. So a lot of these juniors, even though they've gone up so much, they're still trading as if gold's below $1,400. So the market is just now starting to price in an $1,800 floor, I think, here. And like you said, you mentioned Robinhood traders. That's another good point. You see these Robinhood these millennials have got into open up Robinhood accounts. They've discovered there's evidence that they finally discovered the precious metal sector. So you take this tiny sector, has a market cap collectively of about 350 to 400 billion dollars. Yeah, the miners. That's it. That's tiny. That is like less than 1% of the market.
And
So
that's
you
after going
have
up.
all these people coming in at the same time. It's going to be interesting. It's going to be interesting to say the least. I mean, you're going to see some huge moves. So I implore you to not try to trade in and out of your core positions here. Absolutely take some profits on the way up, but trading in and out is not a good strategy here, because these things are extremely volatile and they can rise a lot farther than you think they can.
Up until recently, we saw silver lag gold. Silver is now outperformed gold year to date. The GDXJ was outperforming the GDX was outperforming the GDXJ. And I think we're really close. I haven't done the math on it yet. We're either now above the GDX on the GDXJ year to date returns, or very close. But given that, what's your expectations here on out? Obviously, gold and the gold producers led the way. Now silver is leading, and as capital starts to flow out to the margins, what are some of your expectations on silver and the junior miners?
Okay, well, if you take a look at the technical targets of both the GDX and the GDXJ breakouts, they've both broken out now of huge 7-year accumulative bases. So when you see a breakout of a huge accumulative base like that, the bigger the base, the bigger the move higher out of that base. And the technical target of the GDX out of that base is 50. GDX is already, I think it's already hit around 42. But the target for GDXJ, once it broke above 49, is 90. And there's some resistance here at the 62 area, which we're seeing right now, as both ETFs have become extreme overbought in the long term on their monthly charts. But as far as the juniors are concerned, I expect them to continue to lead here now that we're in the sweet spot of this bull move, of this bull up leg in the GDXJ. And remember, the GDXJ, even though your average retail investor still uses it as a barometer for the juniors, there aren't any juniors in the GDXJ anymore. There's maybe one or two. It's mostly mid tiers, smattered with some senior gold producers. So the actual juniors are doing extremely well here. I mean, I've had one of my positions move up sixfold just in the past 3 or 4 months. So these things are are even though they've really had some huge moves, we're going to see even bigger moves down the road. But in the short term, there should be some profit taking and some consolidation here. I'm expecting it any day, like I said, with gold in a runaway here, and we might see a pullback once the COMEX gold price hits $2,000.
So that's just things going on day to day, normal operations in a way. I mean, it's hard to call anything that's going on in 2020 normal. But I mean, let's say we see another fallout in the stock market like we saw in March. Do you think people will be more likely to snap back into the metals quicker if we do see a drop based on their most previous experience, which was March, and watching the metals go down but then recover? Do you think that most recent experience will cause people to buy the dip even quicker and maybe see even a quicker recovery in the metals going forward here?
Well, first of all, Kenneth, I don't see that taking place. I mean, you've got central banks around the world led by the Fed doing everything they can to prop this market up with 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 huge amounts of capital. I mean, the Fed's balance sheet is expected to be 10 trillion in just a few months here, and that's 40% of our GDP. And I don't. And where's that capital going to go? Where it all went before during the first panic was it went to the dollar, and the dollar was the only thing large enough to hold it. Now, would you be buying dollars here uh, right now? I mean, with what's going on with the Federal Reserve and what they're doing, I wouldn't be holding my money in any currency, and that's what the market's telling us right now. They don't feel safe holding their money in any currency. They'd rather hold it in gold. Now, the gold market's not big enough to hold that capital either. But what's big enough to hold all that capital are blue chip stocks in U.S. stocks that pay healthy dividends. I mean, the U.S. economy is not doing so great, but the EU is much worse. I mean, I wouldn't be surprised to see the European Union put their currency on a digital system within the next year. China's already doing it. They're rolling out a digital renminbi next week in 4 cities, and we don't even know how much gold China has, and they would like to back their currency with gold. So, and what they want to do is they want to get away from the SWIFT system. You know, they saw what Bitcoin did. It went going to $20,000 in a year because wealthy Chinese were using Bitcoin to get money out of China. So they said, okay, we should have a digital renminbi. We can get away from the SWIFT system, and that'll also get us away from U.S. sanctions. So I wouldn't be surprised to see these digital currencies really start to be the buzzword here, and which is another reason why gold is going so high.
David, on the spectrum of extreme capitulation to extreme euphoria, do you have any sort of idea where we are on that spectrum in terms of the junior mining sector, the resource sector as a whole?
Oh, this is the early stages, kind of. I mean, if you take a look at that XAU to gold ratio that I mentioned, it made a bottom in 2016, and it's made a double bottom in March when we had the false move lower in the gold sector before we had the breakout. I mean, this sector is famous for doing this before we have huge moves. Before you have a huge move in the precious metal sector, there's always a false move in the other direction. It happened in 2008, and it gets everybody out of the boat. And once that takes place, there's nobody left to sell. And this was a classic bear trap, what happened in March. And with what's happening right now, this is as far as the environment for both gold and now silver. I mean, with silver, it's even more bullish because now you've got supply concerns. You know, with all these mines that were shut down due to the response to COVID. You know, more than half of silver that's produced is produced as a byproduct of mining something else. So you've had a combination of the physical market on fire with the supply constraints going down due to all these mines shutting down. And you've also had a huge breakout of a 7-year base in the silver chart as well. So I expect extreme volatility to continue here.
And so maybe to give us some sort of framework for expectations going forward, let's say you got a price target of $100 silver, $50 silver. What do you start to, when do you start to decide to sell? I mean, not necessarily for silver, or maybe a price target for gold. Are you looking at some sort of ratio? Are you looking at volume? Are you looking to sell below? Like, let's say you think silver can go to 100. Do you start considering selling at 80? I mean, what are some of the things that you start to think about?
It's great questions, especially with silver. It's so volatile. I mean, look, we had a $4 swing just the other day. So this is an extremely volatile sector. One good thing to watch is that gold silver ratio. It got down to 30 to 1 at the top in 2011. So once it gets down there, that's probably a good time to start getting out some silver. Um, as far as the gold price is concerned, I mean, just let the market be your guide. I listen to the language of the market. I don't like to give forecasts of where I think the gold price is going at a certain point. I like to listen to the language of the market, what it tells me. And the language now is telling me that both the gold and silver price are going much higher in the long term, but in the short to medium term, we're due for a pullback.
David, you mentioned digital currencies. What's your opinion on something like Bitcoin? Is it something that intrigues you, fascinates you? Do you like it, or is it something that you stay away from?
That's something I stay away from because once these countries go digital, I mean, Bitcoin will be useless. I don't, I'm not a Bitcoin enthusiast, or I'm not a Bitcoin uh, analyst. I'm not the person to ask that, but I've stayed away from it because it's just basically ones and zeros. It's not based on anything. There's nothing backing it. Just the full faith of whoever continues to buy it,
Hmm.
which is basically the same thing with paper currencies and with fiat currencies. So, we've seen all these stories now being thrown into the news about how paper money is bad because it carries virus, and you see all these signs saying we only take debit and credit cards, we don't take paper money. So this is where this is all going. Nancy Pelosi tried to get a digital dollar in the first stimulus package that was announced right away. Everybody's panicking; they want a stimulus package, so the politicians they try to put these things into these bills that anybody will accept because they want to accept. They need money. They want a stimulus package passed, but the Republicans caught it and they took it out. But eventually, all these politicians, they want a digital currency so they can tax us whenever and wherever they want, and they'll know where every single penny of our money is going.
Yeah, definitely. And I think it's a little more nuanced too. I mean, the difference between what Bitcoin is and some of these other digital currencies. But I appreciate the feedback on that. I thought that debate between Peter Schiff and Anthony Pompliano, they just went out a day or two ago. I thought that was so fascinating to listen to it. And I tend to love the things that Peter Schiff says, but I actually am a little more bullish on Bitcoin than Peter Schiff. But I do understand some of the arguments, and well, that's why it puts it a little more in the speculation category. But I tend to believe that there's going to be more buyers than sellers over time, which is why I believe it's going to go up. So, David, please share with us some closing thoughts here. I mean, we had a great conversation. We kind of went through the mining sector, precious metals. Maybe it's just some closing thoughts here on how to move forward, and how investors can think about this sector, especially as it's moving so fast, right? I mean, it's so hard to jump into a market when it's moved so quickly for people. How do you regain your bearings and start to deal with what we have at the moment?
Well, first of all, it's important to keep your eye on the big picture. And second of all, it's important to once to do as much research as you possibly can into these juniors before you take a position, because you want to get into something that you feel comfortable holding for the next few years. Now that we're in a buy and hold market, I mean, basically the past 10 years, the junior sector, we've been trading amongst ourselves, all these junior precious metals investors, because there's been no retail to buy and sell to. So now the retail sector is coming in and they're bringing in all this capital. So, you want to make sure that you're holding the right companies, because you want to be confident in holding it for the next few years, because it's going to be extremely volatile. You know, you're going to, these moves that have these juniors that have gone up 3, 4, 5 times, they're going to have 50% corrections. So, you know, of course, you want to take some profits off the table as they're going up, but you want to hold a core position. And to hold a core position, you have to be confident in the company.
Good deal. And if people want to learn more about you and the website that you run, the services you provide, please let them know where they can go and what they can expect to find.
Sure. I read a weekly column for Kitco. It comes out every Friday morning. That's kitco.com. And you can find me on my website, juniorminerjunkie.com. That's junkie with a Y.